Hey everyone, and welcome back to the channel. Your technical guide here. Today is April 9th, and we need to talk about the S&P 500. We've seen some dramatic, high-velocity moves to the downside recently, breaking through some key levels. Let's dive deep into this daily chart, break down the technicals, identify critical zones, and discuss potential scenarios moving forward. Grab your coffee, and let's get to the charts. Alright, looking at the S&P 500 daily chart, right here, Wow. After that strong uptrend that carried us from the middle of last year all the way up to highs near 6,200 around the turn of the year, the picture has changed dramatically. First off, trend analysis. The clear uptrend structure, marked by higher highs and higher lows, is decisively broken. We are now in a confirmed short to medium term. Notice the series of lower highs and accelerating lower lows, especially over the past few weeks. The angle of descent has steepened significantly, indicating strong bearish momentum. Now, let's talk support and resistance. This is crucial right now. Resistance, that zone around approximately 5,208, which acted as prior resistance and then brief support, has been obliterated. Even more significantly, the major support area around approximately 4,900 left on the chart. See how price consolidated there back in August, September 2024? That was a critical battleground. We've now decisively broken below this level in the latest session. This breakdown is technically very significant. This approximately 4,900 level now flips to become major resistance. Any bounce attempt will likely face heavy selling pressure here. Above that, approximately 5,100 and approximately 5,280 near further resistance zones. Support. Where could we find potential footing? Based on previous price action, the next logical areas of potential support are marked here around 4,773. This aligns with swing lows we saw back in the July-August 2024 timeframe, and below that, around approximately 4,677. This corresponds to lows established earlier, around June, July 2024. These are the next key levels the bears will likely target and where dip buyers might start showing interest. Let's look at volume. Notice the volume bars at the bottom during this recent sharp decline, especially on this last massive red candle. Volume is significantly elevated. This tells us there's strong participation and conviction behind this. High volume on a breakdown confirms the validity of the move and suggests institutional selling. Now, down to our indicators. We've got the RSI down here. Look at this. It's currently reading around 21.38. Anything below 30 is considered oversold. Now, crucially, oversold doesn't automatically mean markets can stay oversold for extended periods in strong down. However, it does signal that the downward momentum is potentially overextended in the very short term, increasing the probability of a relief bounce or consolidation soon. We are not seeing any bullish divergence yet, which would be a stronger signal for a potential bottom. Also, take note, there appears to be a proprietary indicator signal at the top left here showing sell. While we always cross-reference signals, this adds another layer to the current bearish sentiment. Potential scenarios and strategy. Bearish case. Given the break of approximately 4,900 support with strong volume, the path of least resistance remains downwards. Targets are the next support levels, approximately 4,773 and potentially 4,677. A strategy here could be selling into any weak bounce that fails to reclaim 4,900. Potential bounce case. Due to the deeply oversold RSI, a sharp relief rally is possible. This would be a counter-trend trade and thus higher risk. Buyers might look for signs of stabilization near the support levels. The key resistance to watch on any bounce, 4,900. A failure here would reinforce the bearish outlook. A strong reclaim of approximately 4,900 might signal a pause in the downtrend, but we'd need more confirmation. Buy-sell level summary. Potential sell zone, approaching approximately 4,900 on a bounce, especially if price shows weakness there. A break below, approximately 4,773, could also trigger further selling towards approximately 4,677. Potential buy zone. Near approximately 4,773 or approximately 4,677, but only with confirmation, for example, bullish candlestick pattern, RSI divergence forming, decrease in selling volume. This is catching a falling knife, so extreme caution is needed. So, to wrap it up, the S&P 500 is technically in a downtrend after breaking critical support at 4,900. Volume confirms the selling pressure, and while the RSI is oversold, suggesting a potential bounce, the approximately 4,900 level now looms large as major resistance. The next supports to watch are approximately 4,773 and approximately 4,677. Remember, this is purely technical analysis based on the chart presented. It is for educational purposes only and is not financial advice. Trading involves significant risk, and you should always do your own research and consult with a qualified financial advisor before making any investment decisions. Manage your risk carefully. What are your thoughts on the S&P 500? Are you seeing the same levels? Let me know down in the comments. If you found this breakdown helpful, smash that like button. Subscribe for more technical analysis, and hit the notification bell so you don't miss the next update. Stay safe out there, and I'll see you in the next video.